Good morning. Good morning. I'm nervous. I'm Charlie.
Good
Good
morning,
morning.
this is Juan.
Good morning. This is Mel Stone. Thank you for joining us.
Those two aren't nervous. I am.
You've got
All right. So we are on. Can everybody hear us and see us? I guess that's the next question.
we've
Yeah.
got good
Good
feedback.
deal.
Mhm.
Good
Like
deal.
it.
Well, all right. Well, Swan, let's get started. Actually, before we get started, I want to kind of break this down for y'all a little bit. This webinar is about options flow. But before we get to options flow, we want to get a little bit into the mental side of trading. Because if you don't have that down, options flow is not going to do you good. Charting's not going to do you any good. Nothing's going to do you any good if you don't have the mental side down. So, Swan, go ahead and start with some Twitter threads.
All right, excellent. Good morning, everybody. So this is, you guys should be able to see my Twitter page here. This is actually a thread that we found from an awesome trader. It puts out a lot of nice information. Zen Options, you can kind of see it there if you're interested in giving him a follow. But he put out some, this was earlier this year, back in January, is when he tweeted this thread out. And Charlie brought it to my attention, and it's just some deep information here that needed to be said. And everybody who wants to learn to trade options and even options flow needs to read through this. So we're going to read through it quickly, and then Charlie can elaborate a little bit on it when we finish up. It says, unless you are an expert technician and or have serious market knowledge and intuitive skills, I recommend buying at least a month of time and not holding through an earnings report unless you've trimmed your position at a significant profit or are playing leaps. So what are leaps? Long-term options, typically with an expiration of longer than a year. So while playing OTM means out of the money. While playing OTM weekly options has the potential for huge returns and will undoubtedly get your adrenaline pumping, it's also an easy way to lose your money. Big if here. If you insist on playing OTM weeklies, meaning the contract expires the same week that you bought it, be very cognizant of your position sizing. Each trade should be a very small percentage of your account, and you should assume that every trade you make is going to zero. However, you don't need to play short-term options to make serious money over time. You can still make massive returns on options that have expirations that are 2+ months, even 2+ years out without taking on so much immediate risk. I can't count the number of times I've seen leaps go 1,000, 2,000% over the period of a few months, sometimes even just a few days or weeks. Once you take the time to fully understand the power of compounding, you'll be much less likely to want to trade vehicles with extremely high risk. In the end, it comes down to your system and how your personality fits into that. There are some heavy hitters that do well playing FAR OTM weeklies, but the very few who are consistently successful doing this have significant experience and watch position sizing very carefully. Personally, moving away from weekly options was one of the best moves I have made in my career. When I started placing more focus on consistency, protecting my capital, and compounding my money instead of hitting home runs, my account grew exponentially faster. This thread is meant to be food for thought, particularly for those who are just getting into options or thinking about it. Options can be very lucrative, but it's good to start slow and gain a comfort level with how and why they move. Hope this helps a few of you. Cheers. So Charlie, you want to give your thoughts on that?
It was one of the things that probably helped my account more than ever too. This was years ago. Some of the mistakes I made was, ERs, holding through ERs, too many weeklies. This is something Davis Trades has echoed recently too. He's taken Davis Trades, another great follow by the way, has also taken weeklies out of his arsenal. Now, that's not to say that I never trade weeklies, but where it used to be probably 60% of my trades, it's probably down to 5% of my trades. It has to be a very, very good setup, and usually it's off of news like a great ER or something. So it is something I've slowed down on. But mentally, where people I think mess up is they see those big gains, because you can have some monster gains in weeklies, 5,000 percenters, and everybody's like, man, just trying to hit that next big one. They're not cashing out, you know, when that's up, and they're just playing too many of them. And a lot of people just literally blow their accounts up with weeklies. And we're going to get into some more kind of swing stuff here shortly. But I thought that was a good place to start. And another one, Pro Trader K. Let's check this out. Go ahead and hit that one, Swan.
All right. So she puts here, too many new traders see quicker profits at the open than think it will be that way all day. Unfortunately, it doesn't work that way. So many variables will work against you into the day. For example, volume dries up, etc. Learn to make your goals and be patient the rest of the time. And then this was a retweet of hers. So if we go back to what she mentioned I think a little bit earlier today, she says, your job as a trader is to make profits on informed decisions. It's not your job to trade all day. If you make your goal in 30, 60, or 90 minutes, move on. If you try to trade all day, you will defeat the purpose of the trading lifestyle, which is freedom, and probably give back your gains. Okay, show of hands, how many have done that?
Many, many, many. And which takes me one more, and I didn't have this on the list, but let's go to Squeezy for a minute. It's Squeezy.
All right, let me pause this just for, whoops. Let me pause this for a second, and then I can get there. Which tweet am I looking at on Squeezy?
It's where he made a mistake last Friday.
All right, and this one?
Well, that's a good one too. If you want to show everybody that, that's a good read for everybody later. But scroll on down. Go to his Friday stuff where he's just talked about, and I retweeted it. So if you just want to go to me, that may be easier.
Okay. Let me pause this again.
You don't have to pause it.
There we go. That one?
Yep.
All right. Squeezy says, I have been trading a long time and have a full set of rules for myself, and I broke one big time this afternoon. I overtraded, went up quite a bit, and I lost every single penny. Goes to show everyone messes up. I am done for the day now and will be burning cigs into my arm. Joke.
Yeah. So basically, Squeezy had hit his goal. And this is one of the things when DMAC over at BlackBox, David McKay, first come to my house and learn to trade. I said, look, you're going to have some good profits in the mornings, and I need you to go to Starbucks and forget it the rest of the day. But you're not going to do that. You're going to go ahead and keep trading. And then you're going to lose those profits. Sure enough, within a week, he called me, and he was up like 1,600 one morning. By the time he left, he wanted to make it to 2,000. And by the time he left, he was down 800 that day. So this goes back to what Pro Trader K was saying as well. Make your daily nut. Leave the casino. Leave it. You've made it. There's no need to keep pushing chips out on the table. Learn from these people. This very good, and not only Squeezy and PTK, Pro Trader K, not only are they great traders and will give you some good entries and exits, the philosophical part of trading, or the psychological part, I should say, of trading, very, very good. Read through their threads. They have some great threads, some great knowledge tidbits that they drop. Most of y'all need to see these things because you're not already a professional trader, and professional traders need to see them. I love reading this stuff. I don't even consider myself a professional. Let me rephrase that, but I've been doing it for 22 years, and I still need to see all this stuff. I need daily reminders of it. Daily reminders.
Yeah, I think you mentioned earlier. I think earlier you mentioned Davis Trades. He's another one that's very good with the psychological part. And for traders, that is key. You have to get that under control, because in trading, what's interesting about trading is you have to be okay with being wrong, and that goes against every nature of a human. So you have to be able to conquer that. And all of these ones that Charlie's mentioned, Zen Options, Davis Trades, Pro Chick K, Squeezy, they have that under control, and they tweet out some nice stuff just for that. So just a quick share for you guys all this morning.
Because mentally, your biggest problem in the stock market isn't the market maker. The market maker didn't, your contracts, you bought them at $2. They're at 250, and then all of a sudden they dropped to 180. And I see some people, the market maker came down and stole my contract. Now listen, they didn't spend $3 million dropping the stock to get your two contracts. That's not how this works. You didn't take profit. You didn't see the chart starting to turn or whatever. Good slide right here. This is from an old webinar that me and Maria and Teresa had done. Puppy trading. Puppy goes outside and pees on every bush, car tire, and mailbox and tree. Don't be a puppy. Old dog goes outside and pees on one thing and goes back in. He just wants to take a nap. That's sort of like how I trade. I know that's how Swan and Mel trade too. I need that one good thing. Sometimes you don't get it. You just don't trade. You just lay on the rug all day. But don't go out, this is moving. Let me jump on this. Oh, man, that thing is jamming. By the time you realize it's jamming and you go ahead and chase it, you've probably caught the top. Let it pull back. So puppy trading, that's a good slide there, Swan. What's the next one there? Aliens and Yetis, averaging down. I get this question every day that I wake up. Man, I bought these contracts at $2. They're at $1. Should I buy more? And I don't know if you can read it on the slide very well, but it says, I have a better chance of seeing an alien go outside, bleep a Yeti in my backyard while National Geographic is filming than I do winning by averaging a trade down 2 or 3 times. A losing trade's a losing trade. Do not start averaging your options down. If this is something that had a year out and there was some leaps and you didn't get a full position, you wanted 10 contracts and you bought 3 and you're like, over the next couple of months, I'm going to add 7, then that's one thing. That was your plan all along. But to be sitting there in a weekly contract, that you bought Netflix for $2, now it's down to $1. Well, I'm going to add more. Man, I can't lose that money. I've got to add to this. You're better off to cut than you are trying to chase your loss back on that one.
Yeah,
I think we have one more.
Yeah,
go ahead.
There's a difference between averaging down and then entering into a full position too, because we get this quite a bit. If we enter into a trade and I have a set amount of risk that I plan on putting into that position, and I know that maybe we're at high of day and I want to enter, I may enter, but not with a full position. So I may just take 25% of what let's just say I want 4 contracts. I may buy 1 contract, and then the next day it dips way down and I buy another contract. That's not averaging down in that instance. It's working into my full position. So there is a difference. It's when you agree that you're going to buy 1 contract and that thing drops 50%, and now that's your trade plan. So you should have cut it. But averaging down at that point is, well, at this point I'm going to buy another one. Well, now you just threw your trade plan out the window, and that's where this risk is extremely important. And when we see traders averaging down, it may work once in a while, but it will not result in consistency. So, yep, our next slide.
Staggering. This one, I can't even really read that one.
It says in the 1980s at Splash Casino, my uncle said, nephew, it's time to leave. I was up $990, but I wanted 1,000. And what was the result?
I lost it all. This is a true story.
Yep.
I needed that 10 more bucks. And I told him, Uncle, man, let me play this one more hand. So I threw the 10 bucks out there, lost it. Now I'm at 480. Threw 20 out there, lost it. Now I'm throwing more out there. I split some shit, lost it. Next thing you know, not only did I lose my 990 bucks, this was in the 80s. I think I carried, if I remember right, 300 bucks in with me, which was my total paycheck back then. And I lost it all trying to get that $10. One of the things that we try to teach consistently is not watching that P&L. Watch the chart, right? So I can't count the times and options where I'm sitting there going, I'm up 490 bucks. Man, just one more tick and I'll get out at 500. One more tick, then you're at 480. Then you're like, oh man, come on, just get back to 490. Give me my 500. Next thing you're down to 400 bucks. Instead of just cutting this thing earlier, now you're sitting down 200 bucks, right? We've all done this. I call it the Fiji story. I tell this a lot. And we're going to get into some flow here in a minute. But again, I think the psychological part of getting traders ready to even go down new paths or something, you need to understand all the pitfalls in trading, which we don't have obviously time to discuss all the pitfalls, but I did this too. And this is back in the 90s. True story. Now, I call it Fiji. I really wasn't telling her to Fiji, but the story goes sort of like this. I had bought some stock in, let's call it XYZ for a couple $100. And we were going to the mountains for an anniversary or something. I don't remember. This is a long, long time ago. And I doubled that money. Stock went from $2 to $3, right? I'm like, honey, we're going to Florida. Screw the mountains. You've been wanting to go to the beach. We're out of here. Next thing you know, stock's at $4. Honey, we got enough money to go to Hawaii now. Next thing you know, it's at $5. Honey, we could go to Fiji if we wanted to. Next day it drops to 4, and I'm like, man, why didn't I take that at 5? But next time it goes to 5, I'm going to take it. The next day it's down to 3. And I'm like, shit, I should have just took that 4, but when it goes back to 4, I'll take it. Next thing, it's back down to where I bought it. And I'm like, man, I should have just took that 3 because we could have went to Florida. But next time it goes to 3, I'll take it. Then it drops to $1, and I've lost half my vacation money. When did I decide to sell? When it got cut in half. Had all those opportunities on the way up and on the way down. But greed got to me, telling my wife every day, oh, check me out. I'm a badass, right? Almost probably cost me a divorce. I don't remember, but, all that greed, from 2 to 3 to 4 to 5, never took profits on the way. I can't wait for it to go back so I can take my profits. I can't wait to go back. Oh, please go back. Oh, damn it, you got cut in half. And unfortunately, that's what most traders do, especially in your earlier stages. So yes, the stay green. I remember that happening to me at the casino. Also, the moral of that is when you see that position up $490, but it's starting to get tight on that chart and it's starting to hit some resistance, you don't know, take the profits. Don't worry about that extra $10. Don't do it. Swan, what was the next slide?
Well, I think now we're going to go into this before we start getting into our flow, and that is when options flow comes in, it is just a bunch of data. And this is what it looks like, okay? It's basically taking a big pile of Legos and just throwing it in there, and you don't know what you have, right? So this flow comes at us very quickly throughout the day. It's all different sorts. There's sweeps, there's blocks, there's some above ask, there's below bids, all different price points, different strikes, different expirations, calls, puts, and all of these tickers, thousands of tickers that's coming at you. So what do you do with the information, right? So when it comes at you, all you have is this big pile. But what you have to do is you have to sort it out, okay? So we take that data and now we sort it out. There's a lot of ways you can sort out data. So just using the same illustration here, you can sort it all by color. And now you've got different categories, different columns. You can kind of see what you want to see. But is it truly still telling a story? No. All you have is a bunch of Legos now in a certain color, all arranged. You can stack them in different ways. You can stack them by size. You can put them, you can make them very visually appealing by making them all different levels and actually you putting the Legos together. So it becomes more visually appealing. Is that telling a story? No, it's not. It's just organizing it in different ways. So when it comes to options flow, we have to be able to tell a story. And that's what we always go over is, does the flow tell you a story? Now, if we take that same pile of Legos that we have all that data, and now all of a sudden we build it into something, see, now we have the story. Now we know exactly what we're looking at. We're not looking at a big pile of Legos. We're looking at a nice designed house with a lawnmower out front and a tree in the back. The story is easy for us to see. So with options flow, we get people all the time that take screenshots of flow. Is this good flow? Is this good flow? Is this good flow? Well, this is the data coming in. What they've picked out may be something here, right? But no, it's not good flow because it's not telling us a story. Good flow tells us the story, and we're going to go through some examples of good flow, bad flow, and what you should look for. We have a checklist that we'll go over on what you should look for as this flow comes in. I don't know if you guys have anything else to add to my Lego illustration here, but jump in if you do.
That's pretty good. Can I have a pool in the back?
Yeah, exactly. Yep. All right, so where you want to head here? You want to head over to the BlackBox website and look at some flow?
Yeah, let's look at some flow. Let's go ahead and check that out.
All right. I'll drive, you tell me where I'm going.
You know, oh yeah, that was back in the way back. Let's look at the, let's go ahead and look at that coupe.
All right, so coupe flow, I'm going to go down here to historical because the flow that we want to look at came in on August 18th. And I'm just going to go to Friday the 3rd. And it was these September 17 220s that were of interest. There you go.
You want to put that on a monthly chart? You want to put
let me back up here to.
So when this flow came in, it was at 211. So basically right there at bottom. And this was just a $1.1 million sweeper. Everybody got excited about this. Everybody got excited about this. It had some time on it. It catches ER, which is tomorrow, by the way, tomorrow afternoon. And look at that ER run. Look at that ER run. This thing, these contracts hit $44, I believe, on Friday from $9. So this goes back to the puppy trading.
Oops, sorry. Yeah, 43, 44 bid ask.
Yeah. This goes back to puppy trading. This is the kind of flow we're waiting on. Now, not even going to lie to everybody. I $500 chucked this. It was kind of one of those. It was getting to me. It was a little iffy, or it was kind of hanging out. I didn't give it time to work, so I think I sold these for $13-14, somewhere in that area. I know Tanner from Charting Options and also Options Charting. Another great follow, by the way. He still has half his position left in the 40s. Talked about some diamond hands. But that's the kind of flow we're sitting here waiting on. We're not sitting here looking at $20,000, $50,000. Now we are if it comes in enough times and they're grounding and pounding those 50,000s, just boom, 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 boom. That's a different story. This was just clean opening, $1.1 million above the ask sweep. And you can see here where somebody did take some profits on Friday a little bit. They've got their money back. I'm guessing they're going to ride this through ER. I think that's suicide, but at this point, they actually have their money back. They've took enough out of it with a little bit of profits and probably sold some smaller lots that we didn't catch. So they're riding this for free now. That's the kind of flow that I'm looking for.
I'm anxious to see if they take a little bit more tomorrow before close.
Me too.
Yeah. And we'll see it if he does. He or she.
He or she. Let's hit that Netflix the other day on my Twitter feed.
Oh, you just want me to pull up the Twitter feed? Okay. That would be easy too. Hang on.
So this is live. That when you click on those pictures, you can see our chat room. I think it's next to that one. So yeah.
It's loading. Just go to meeting. Go to webinar. Slowing my PC down, I guess.
Anyway, member was looking at part of the data and just had the ask side up there. And you can see this was live out of our chat room. He's like, decent amount going into Netflix, October 15th, 6:30s. And if you just look at that top part, it was all ask side. And actually, maybe we should, after this, we'll pull it up on BlackBox. It'll be a little clearer. You see Mike right there saying, look, the price is going down. And then down here, I'm like, I showed the whole flow. And you can see it's all bid side that morning, ask side that afternoon. You can see my comment. This is all live. You can see the timestamps. I believe these were written and bought back. OI will tell us in the morning. Sure enough, and you can see that in the pictures over here. OI was 46.61 at the start of that day. And the next day, 39.93. So not only did they sell everything that they had written that morning, they got out of even more. They were taking profits on this trade. So that was easy for us to spot. You know, where most sites just showed you the ask side, you might have got excited and bought that. But I'm going to show you something else of why we wouldn't have bought that, even if we didn't have all the data. So I want to teach you guys that are on some of these sites that don't have bid side. I'm going to show you a little trick right here. Let's go to those 630, Swan. Let's see.
Oh, let's see. Go to historical. That was on Thursday the 2nd.
I believe so, yeah.
And it was there.
Yeah, just click those ask sides for a minute, those purples. Well, let's show them a little trick here. So even for you guys that aren't, because we're not trying to sell you anything. I'm not even going to mention. I'm not trying to sell you jack. That one day there, the purples was that day. The whites were the following day. You can see there they started at 750. Let's go to the bottom there. The first sweep was at 750. Then the next one was at 750. Didn't move. 740. Didn't move. 735. Didn't move. 740. 725. So even though those were ask sides, the IV never jumped. Stayed at 26. The contract price, the spot price, look at the spot price. There's one. 587.89. The spot price actually goes up to 588.06. So the spot price is increasing, but the contract prices aren't, and the IV isn't. So all that buying right there, which looks like to me, when I'm looking at it, 5, 6, 7, almost $1 million right there, and the contract price kept dropping. Why is that? Now, when you have all the data, go ahead, Sean, and show them that bid side there. As Mike was telling them, don't buy it because the price isn't going up. Instantly, that told me I need to go look at the whole story. And the whole story, I was 100% right. Oh, I proved it the next day, and we proved this live. But even if I didn't have that bid side, which most of you do not, right? Even without that bid side, those contracts not moving up and that IV not moving, don't touch it, even though that was almost $1 million. That contract price should be moving up. Should be moving up, and we'll show you some examples of some contract prices going up.
Yeah, I think if I show, let me, yeah. Can you guys read that? Does that show up okay?
I can read it. I'm blind, but you know, they can hopefully see it a little better.
Because here's where, what's nice about your tweet picture is it shows the timestamp of the day too.
Yeah.
Where before it was just showing the day in general, but this shows that in the afternoon they were coming in with these purples, but earlier in the day we saw the bid side selling.
No. So what happened was they wrote those contracts that morning and then bought them back that afternoon and secured their profits. So they were buying them at, $9.60, $10, and then buying them back for, 25, 30% profit. They closed to that position. So if you didn't have the whole story and you're just on one of those sites and you're like, man, there's $1 million in Netflix coming in for October, shit, I'm in. And then 2 days later, you're like, man, flow sucks. What the hell? I bought this. You didn't have the whole story. But even if, and this is what I want y'all to remember, because I don't care if you use BlackBox or not, I want everybody to use flow correctly. Everybody on this webinar wants you to use it correctly, whether you're with us or not, because if you don't use it correctly, it gives flow a bad name. Where this isn't flow's fault. This is your fault for buying flow that you shouldn't buy. You've seen the pictures of live in our chat room where we're like, no, don't. It doesn't fit the pattern. Yeah, CRM, great example. Great example. And then we're going to go to that checklist here in a minute too, because I know he has that. CRM, this one we caught live, just coming through, boom, 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 and you'll see some bid side up there. But this was one trader, one person. How do we know it was one person? We've got the timestamps in my picture, but I'm not even worried about that right now. You see it down here. Now the spot price and these are going up. IV is going up as well, 23, 24, 25. It's not just going insanely up, but it's going up. Even those bid sides right there, if you look, this started at 614. Every sweep, every single sweep was higher or equal to the previous sweep. Every single one of these. Okay, with the exception of the 675 to 674. But regardless, money coming in. So we're instantly on this. We're like, this is a good $100 chuck candidate, which we did $100 chuck that one later in the day. Some of us did anyway. I don't know if everybody did. But those bid side right there, some people would go, well, they sold right there. No, all this happened in a couple minutes. Somebody didn't buy, decide to sell, and then go buy again. Like those 4 bid sides for 126, 220, 182, 185, IV didn't drop. Price is still going up or equal to. Then you can see that other big sweep, that purple on top of it, where it's at 684. So the price did keep going up. So we know that's not flipping. Swan didn't decide, man, I'm buying this, buy. Oh, no, let me sell some of that. Oh, no, let me buy it again. People that are dumping this kind of money don't have that mentality. And this isn't 2 different traders, because 2 different traders didn't decide to go out of the money in October in the same 2 minutes of the day. Didn't happen. So after we've seen this, and I even put it on Twitter live, hours later, it's on the CNBC halftime, the ponytails were, yeah, Judge, and today they come jamming into the October 270s, millions of dollars, blah, blah, blah. We already know. We're already in it. And that's not a knock on them. But we could see this data live. The bid side we knew was equal to or greater than. IV wasn't dropping. So some of you guys that don't have access to everything, look for this. And Mike, you want to go ahead and put that graphic up there of the checklist? I want y'all to take this checklist with you, no matter what site you use. This will help. Time frame. Either short time frame or continuously pounded all day. Same strike, same expiration. Same strike, same expiration. I'm not looking for flow where they're buying 265s and 270s and 275s and 280s and 260s. I'm like, which one do I need to get? I don't know. Same strike and expiration. That CRM that just showed you, same strike and expiration. What happened? Contract price increasing. We've seen that, equal to or greater than. Ask above ask. We had that. We had a few bid sides in there. That's just the way the exchanges filled it, but it's all still moving up. Sweeps, no solo blocks. Blocks are okay mixed with sweeps, but if it was just one block for CRM for that $3 million or whatever they bought, I wouldn't have touched it. I'm not following a solo block. Blocks mixed with sweeps, just fine. So you can see that this checked all those boxes. Same strike and expiration, contract price increasing, ask above ask, sweeps, boom, boom, boom. I think I would need to tell Mike about adding IV increasing to this checklist probably. This had everything we were looking for. That doesn't mean that it's 100% lock. In that situation, we had a nice profitable trade. Doesn't mean it's 100% lock. But the odds say if you follow this checklist, no matter what service you're with, this checklist would have kept you out of that Netflix trade. Now, we've got all the information. I know it's selling. I don't even have to look at the bid side. I already know that it's selling because if it was true buying, that IV would increase and the contract price would increase. I can look at that and tell you that in my sleep. But because we have all the data, I could prove it. And I proved it the next day. But this checklist keeps you out of that trade, regardless of whether you have all the data. If you go back and look at that Netflix, price is going down.
Oh, sorry, I'm trying to find it.
That's all right.
I thought I had it pulled up still. Here we go.
Look at that. 750, 750, 750, 740, 735, 740, 725. No IV increase. Spot price increased. Contract price didn't. So that checklist automatically would have kept you out of this trade. Now, this may go to $100. I don't know. But I can tell you that it was selling. We were right. That checklist kept you out of that trade, regardless of whether you had all the data or not, or whether you could interpret all the data. So keep this checklist, print it out, put it on your desk. If you're with somebody else, look at that. And also, again, while we're talking about prices increasing, if you see something for 20 grand and the price increases on another 25 grand sweep, and then the price, look, I'm talking about sweeps that have millions of dollars. So before you apply this checklist to every little $10,000 sweep, understand I'm talking about big money flow. I don't look at that stuff that's small and going up. That stuff may work. I don't know. I don't track it. I only follow big money. I do not follow ER chase money or ER gamble money. You know, you'll see all this flow coming into, what was it here a while back, Sophie or some one of those that had a bunch of flow, and ER tank, and everybody's like, cuss flow. Every ER has a bunch of flow. Gambling, you know, they're just like taking a shot. Maybe it's hedging. Who knows? It's going into ER. They're taking a shot. I don't follow that. If I do, I sell before I catch the juice. What was it? The gamma guys, whichever one it is.
Vega expansion.
Vega expansion. Thank you. See, I'm nervous as a cat. I will catch the Vega expansion and move on, but I'm not holding through ER. Thank you for that slide right here. Perfect timing. Go over that there, buddy.
So yeah, we get this all the time when we have flow come in the day of or a couple days before ER. And you know, if we said it once, we've said it 1,000 times in our Discord and chat rooms. You ignore ER flow, and here's the 3 bullet points why. So much of it, a large percentage of it, is hedging. All right, these people have long positions, probably commons, and they're just trying to hedge a little bit. If that ER is bad and it takes a dump, then they've got a little bit of protection there on their long positions. Some of it is someone just gambling, and we typically see that late in the day. Let's say they report in the afternoon or the evening after hours, and late in the day, all of a sudden we'll see a bunch of flow come in that just, you can tell it's just gambling. Someone just taking a YOLO, see what happens. They're taking a long position, they're probably taking a short position, playing some sort of a spread, and hoping that the move is bigger than expected. But the biggest problem with ER flow is the IV crush. And until you have felt that yourself, you probably don't believe it. I know I didn't. Early on, I traded AMD, held through their ER. The stock went up $5 or $6. I was now in the money, and my contract opened up down 80% because the IV just got sucked right out of it. Remember, implied volatility, that's what builds excitement in that expiration, that strike. That's what drives the price up. As soon as that IV comes out, which it does that next morning, the contract price drops regardless of if the stock moved in your right direction. You have to be way correct, or that move has to be a lot larger percentage of a move than anticipated for it to even work out. And that just doesn't happen very often. So that's why we say some of it may work, but may is not a trade plan. Okay, that's gambling. Go ahead.
Sorry, Swan, just really quick. ER, guys, is the earnings report. Getting a few questions in the chat. So just to clarify that, that's the earnings report when they come out with their earnings information.
Yeah, thank you for that, because you know what, I probably need to change that slide and actually explain that out. That's a good point. Thank you. So yeah, your earnings report. So every quarter they come out, either pre-market, post-market, whatever they're scheduled to, and they'll put through their earnings, and then the market reacts accordingly, right? So there's several things that the market looks for. But in any case, we typically do not hold option contracts through ER because it's a gamble. It can go any way. They could have a blowout quarter. I mean, just absolutely gorgeous quarter, but not give any forecast for the rest of the year, and the market's going to make them pay for it. So the next morning or that afternoon, that stock may just continue to go down and continue to sell off. You just don't know. So that's why we ignore ER flow as it comes in. As Charlie mentioned, do we play ER run-ups? Yes, we do. So a couple weeks out, we may buy a contract or two of a ticker that's going to report. There's some ones that typically do well ahead of time, and play for that Vega expansion, where what that means basically is IV, then implied volatility, is going into that contract, which means the stock price could stay the same or possibly even go down leading up into ER, but your contract price goes up because of the volatility that's coming into it. But we don't hold through ER. We will always sell beforehand.
Absolutely. What do we got next on there? More tickers, or?
We could do, you want to show that AXP, that American Express?
Yes, let's show that one as well.
All right, let me go find that real quick. Let me see where I put that one. There you go.
So right here, these 170s, and they bought the heck out of this. I think we $100 chucked this one, maybe even a little bit more. But you see those 170s coming through, just boom, 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 boom. Now with these timestamps, forget that first one at 8:30 for a second. 765, 790, 95, 810, 815, 8 1/4, 830, 840. Boom, boom, boom. You had the pattern right there. At that point, we're in the stock. A few days later, 5 days later, you can see them selling this. See all this below bid? Now, what I want you to look at too, IV dropping there. Now, there was some ask side in there. Some sites that only have the ask side, you may have thought they were just tagging on. We look at this and said, they're taking a loss on this. So does big money take losses and change their positions? Absolutely. I'm not going to sit here and tell you that following every whale is foolproof. Now, this was a profitable trade for us. The trade did its job. Whether or not people sold it or not, can't say. We play a lot of $100 chuck, we call it, which is taking profits at $100 per contract and moving on to the next, because we do that so many times a week. But you can see clearly they were starting to dump out of some of that position. Now, not all the OI is gone. There's still quite a bit there, but they did dump out of some of that contract. And it was easy for us to see that they're getting out. So the rule of thumb is, if we're still in this trade when they do that, we're going to exit with them. So you may have got in at, call it 820, and you may have got out at 650. You may have had a loser on this one. Now, I think those hit close to $10, if I remember right. So if you didn't take your profits, there, that's kind of on you. You should have had your stops at, already in place. But it's easy for us to see when they're selling that. Goog, great example here that Swan had, where they bought these 2770s. This wasn't a big sweep, so this wasn't something that 242,000, I'm not going to buy it, but he's just showing good examples of being able to see that data of when they bought it and when they sold it. Great example. You talk about a whale right there that just made some money. It's 400% trade. 350, whatever.
And Goog and Google flow can be very confusing. So typically it's, we get it almost every day, but there's a lot of hedging, I think, that goes on with that ticker. But this was just an example of showing, again, as Charlie mentioned, they came in, they bought it. And when I do a search for Goog on that date and expiration, in fact, let me show you live so you can kind of see for yourself just how the scanner works. So my historical down here, I can go find the historical on it. They purchased that on 8/20, and I'll come down here to current Friday's close. And I want the 2770s, I think is what it was. Yep. So there we go. There's the historical on it. We can tell that they bought those 99 shares or 99 contracts at $24.50, and he or she sold 88 of them for $128 a contract. And so there's a good chance that since there's only 11 contracts out of that position, that they may have filtered some of those off in smaller amounts, and the scanner just didn't pick it up because of that. But that was quite a trade, in and out. I think that was all of our slides that we had planned for that I can see. One of the questions we get asked a lot too. I don't know how you pass this over to me, but go ahead and stick it over to me for a second. All right. And should be coming to you. All right. Let me go show y'all, back in April of last year, 2020, COVID, we hit what they call the COVID lows, right? Stock market was rocking on. Everything was great. You couldn't lose in the stock market. Then boom, 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 boom. Now, what are some of the things that got hit the worst, right? Airlines. Nobody wants to fly. I'm going to catch COVID if I get on a plane. I was one of those people. Nobody's going to a casino. I'm not going to play blackjack next to Mel and catch COVID. Ooh.
right? Banks, oh my God, everything in the world is going to get repossessed because everybody's at home. Those three things were getting hit big time. I mean, everything was getting hit, but travel and banks and stuff was getting hit pretty bad. So I want to show y'all what happened. I'm going to hit historical too. And I'm going to go back to this was DAL that day. Let's go hit the 26s. Let's go hit a 3-year chart. This was April. You can see right here. This happened on April 23rd, which is more over here like at the true low. At the true low, somebody said, you know what? I'm buying some DAL for next month, for May. And they bought, just jammed it right here. And again, you can see the pattern. Look at this, 70 cents, 72 cents, 1.34 million above the ask, 72.8. Look at the pattern on that, right? I look at the IV on that. Spot price, actually, if you look at this, spot price was up 3 cents or even down here, but the contracts were still higher, right? So to me, that's automatic true buying. It does not get any more true than I've got IV going up, even though the spot price is basically flat. These contracts are jamming. It's, $1 million point something dollars. And I think we doubled our money on these in 3 days, if I'm not wrong. And these continued to go up. But you could see they were buying the $26 strike. Those easily hit 30 plus from this 22.59. So you can just imagine what those contracts were, $5, $6. This whale made some serious money. Now, at the same time, now this was on the 23rd of April. On the 24th, we're watching this live, right? The 24th, same thing. Look at casinos. And let me go to the 24th on this, actually. Same thing. Look at this. Somebody wanted LVS and wanted it out to June. Let me hit the 3-year chart. Again, you can see they were hitting these April, maybe it was over here, whatever. And that had a very nice run. But again, look at the sizes here. Coming in at $1.93, $1.99. So we're sitting here, this is the day after they've already bought airlines. We're like, shit, now they're buying casinos. I don't care if they're back down here. This is, what we're looking at here is this, but contract prices, 193. Look at this, all the way up to 232. Spot price only went up 20 cents. These contracts were going up and this IV was cranking. So now we're going, okay, all right, cool. They're buying airlines. They're starting to buy casinos. Somebody thinks we're at the lows. So we jumped into that trade. Next one, same day, JPM. Yeah, that's the one right there. Let's hit the 3-year chart. Again on 424. Look at these lows these people are getting. Now this was only a one sweeper, but we're going, okay, now we've got airlines that are hitting, mega millions on, casinos and banks. Maybe we're at the lows. At BlackBox, and I don't want to say, we called the COVID low or whatever. The flow called the COVID low. And we were able to see that live. So that's one of the things, we get asked about a lot too is, what does the market tell you when it's about to turn? Does the market tell you it's about to drop? Look, I don't think anybody expected this drop right here. I don't think there was anything out there other than news that was going to tell you this was coming. Because let's just put SPY up for the same time frame. And you can see again, the COVID lows there, end of March, beginning of April, which actually just a good looking chart. But anyway, so yeah, the flow did tell us, hey, they're starting to buy back these things. Let's go to some more current kind of things. Just go to flow in general. When one of the things I want to tell y'all too, forget looking at Tesla flow and trying to make any sense out of it. Some people can. I just don't trade Tesla. I just don't trade. There is so much Tesla flow that it will get on your nerves. Some of the things we do look for. Let me go back to historical again for a minute. Mel, you'll remember these because we played these together. Cam was on 626. These right here. IV didn't move. Spot price didn't move. Contracts barely moved up a penny, but they just above they ask $1.3 million. I'll never forget that. I think that's one of those that we back in June of last year that we've seen that money come in and we're like, $1.3 million at ACAM doesn't happen. So that's one of those things that we jumped in real quick. I'm going to show y'all one more from the old historical, then we'll get off there and start to get some questions maybe, which there's over 500 people on here. So I'm just going to tell y'all there's no way we're going to get every question. And let's put in pins. Now this is back when pins, back in the way back. I mean, geez.
Look at that spot price. 21
yeah.
bucks.
It was these right here. And there was a bunch of bid side in this, I remember right. Let me go ahead and put the bid side in here. And everybody was all tripping. They're like, and I don't know, why would they sell here and then buy here? And, oh no, they sold some more here. No, this was just as clean as it gets. Again, IV going up 76, 78, 79 when this came through. I think this stuff was a little bit later, so IV would be dropping, but you can see 245 all the way to 260 before they got filled. Now, this is one of those people are like, well, that's a solo block. This solo block is not a solo block because it was surrounded by sweeps all around it. So that's one, and I think I forget what we made off this one. These went insane. These had went insane last year, but that's just some good ways for y'all to look at flow. Even if you're not with BlackBox, look for that spot price to continue to go up. Look for IV to go up. Even if your spot price is dropping, true buying. Now, if you buy something that's $30 and it drops to 28, obviously your contracts are going to be that, not going to take that pattern. But you'll see stuff all the time that's at $30 and maybe it drops to $29.50 or maybe even $29.25, but those contracts are still going up. That's the pattern I want you to look for. That's the pattern that is moneymaker over time. What's a few of the things we've played lately? HLT had some good flow on Friday.
I've got a couple questions stacking up. I'm trying to get through as many as possible. So I do want to make sure that those that kind of have already had some questions in queue get addressed as well. I know there's several requesting AFRM to go over that one. That was a good one.
Let's go over AFRM. And here's the thing about AFRM that people are, what they're not, let me get to current. And I've heard a lot of complaints about AFRM, which blows my mind because this is a situation where the flow did its job impeccably, in my opinion.
It worked. I played AFRM probably a dozen times last week.
Just on 831, these contracts are 92. Yeah, we played these $100 ones. And look at the size of this. Look at the size of this. These things hit $100 after this came through. Did people take their profits? No. Then they're saying, oh my God, flow doesn't work. No, this flow works. Trust me, I traded it. Let me just get to 831, which would be these. Yeah, this came in at $92. And just boom, boom, boom. You can see, look at that IV. Look at that price increasing. Then you got some more, let's see, that came through. All right, that's just the hundreds. Where I think some people are had some problems is there's some October that came through. October 100s, or maybe it's 150, 105s.
It was 105,
yeah.
I think.
Yeah, good looking sweeps. Follows the pattern. IV's going up. Now these came in at $99, and the stock, as you can see, is back down to 93. These are holding through ER, win or lose. Okay. Obviously, it's dropped down since. Oh my God, flow doesn't work. Who knows? Let's look back at this at October. Again, when this starts to come through 7 days before ER, which is tomorrow, this goes back to the earlier part of this conversation. When you get into that flow, you start getting into that gambling flow. These people will hold through ER. I will tell you right now, these contracts haven't. Let's see if they've been closed. No, they haven't, because this is all. These have not been closed. They're going to hold, win or lose. I can't tell you what they're going to do, but they're going. That's their plan, is to hold through ER. There's no way in God's green earth that I'm actually going to do that. Some other ones that we played that worked on AFRM, God, all these pretty much did. Those Octobers have not. But again, they've owned them for 2 days. So let's see what they do after ER, because that's exactly what they're going to do. This good flow. These work as well. These 115s for 917. Again, these things hit $100 after those came through. If you don't take profits, don't blame it on the flow. Blame it on bad trade management. We've probably traded AFRM 6 times in the last 8 days, I would say, successfully on all of them. I have got some I'm currently holding that I do plan on selling tomorrow. I'm down a little bit in that. That's basically some stuff that I took some, when I looked at the account and AFRM, I'm like, I think this is going to have one more push. We'll see. I bought these on Friday, actually. And I did close down in them. AFRM, that early flow was gorgeous. I mean, they come in at $92, $93, $94. It goes to $100. Your contracts were on fire. Go ahead, Mel.
Okay, so a few questions coming in. Can you talk a little bit about more of our really liquid stocks, Apple, Tesla, because we got a few requests to look at flow, but I think what's missed is how heavily liquid they are. So can you kind of talk through that process and what we would really be looking for when we start to see activity come into those more liquid names?
So Apple, I can very rarely will I play Tesla off of flow, because it is the most gambled on stock in the planet. It probably gives you the best moves. So I don't play Tesla. Apple, and I'll tell you, Theta Warrior's always been good about finding those multi-million dollars in Apple. If you're going to play Apple, you want to look for the bigger size. Don't be looking for the, look for these. Hold on, let's get this back on Apple. Oh, yeah, let's go to historical, sorry. Or am I, yeah, there we go. So let's historically go back to Apple. Let's say go from the 30th to, and actually there was some flow last week, I think, on Apple that was, let me go hit that for a second. What was the 180s? What time frame was those 180s? Yeah, right there. Then there was one. There was another one that came in here. I don't know why I'm not seeing it. No, it's for 10.8. Hold on. I just don't have my filter right. Here they are, 10.1. These caught my attention. These are really, really small. You look at this as this is 125 grand. Exactly 125, actually 125,200. Look at the spot price here. Now, these will catch my attention. Am I going to play 180s? No, because out of the money stuff is another place where some of y'all are just getting killed. I changed this to 150s for the same thing. Apple is up since then. But Apple, I'm either going to look for multi-million-dollar flow, some heavy flow, or I'm going to look for something that's that I can change, like those. You see, this is some of your bigger Apple orders. But Apple has a lot of puts. I mean, if you go to like bullish flow, Apple had a lot. Top bearish flow, Apple did not make that list. But you got, for Apple, it's a $3 trillion company. It's going to have flow. The key to options flow is finding that outlier that doesn't trade, like Visa that we played on Thursday. Let's go to historical Thursday on Visa. We played these. Visa doesn't catch a ton of flow. These got $100 chucks Friday. I actually didn't $100 chuck them, but these did go to $8 from this, 680, 690 range, which was good enough for us. I'm looking for something more like that, like HLT, which was Friday. Oh, geez. What did I do? Here we go. If you look at those HLTs, again, look at this IV, 29, 30, 31. Spot price, 517, 540, 560, all the way to $6. Spot price is going up, but look at this. So this is something that caught our attention. I'm looking for stuff more like that than Apple. Apple flow, I don't believe I could be a profitable trader on. I could probably trade Apple, just trade it and be a profitable trader, but probably not off of options flow. It just has too much of it.
Agreed. Yeah,
every fund out there is trading Apple.
Yeah, and when we see Apple flow come in at the opening bell nonstop, it kind of gives us a direction of the market for that day, for at least for the first few hours. So I usually watch Apple flow just to kind of get an idea on direction of market, just simply like watching semiconductors, same reason.
Yep, couldn't agree more. How many people do we have on here? 526, Jesus.
Yeah, we're getting a lot of individual requests. So unfortunately, we're not going to be able to get to all of the individual tickers. So I'm going to try to collectively take from a few of the questions to kind of address a little bit broader. So let's talk about the person that is at work, and are these alerted? And with this much information coming through, how are they able to still manage those trades?
We're going to send the best of the best. We've got an app that's downloaded, and if you look at Flow Plays, it's under Flow Plays. We send the best of the best to your phone, and most of those are in between trades. That HLT went to your phone. I just looked at Visa went to your phone. AFRM went to your phone. INTU from last week, which was a beautiful dip buy. Now, this wasn't one that had a ton of flow, but they did what I call let's get the F off there. And these flows were an hour apart. So this is the one that got my attention. Let's pull up a 5-day chart on INTU. If you look at where they bought this, spot price was $5.55. Again, forget this one. This was an hour. This was in the market open. This was an hour later. They hit that one at lows that day. And, the rest was history. So this was sent to your phones. I think this hit $14, $15. I think I got out for like $13.80 or something like that, if I remember right. So something like that, we call it buying into blood. So at that point, I'm not necessarily looking for millions, but I'm looking for opening orders into weakness and that into INTU. So we're going to send the best of the best to your phone. That stuff that I'm going to personally swing with you, unless it just tanks that day, which is very rare. I think I've had that one time happen since the app started, and that was MU. I think that's happened one time I think we've crossed 100 plays on the app now. But for the most part, I'm going to swing every bit of it with you, or I'm going to tell you it's a $100 chuck candidate. MSTR was sent to your phone last week. That was a gorgeous, gorgeous sweeper.
And that was kind of rare for us to send that out because that was a weekly expiration, right?
That was a weekly expiration.
Yeah.
It was that one. Let's go to a 5-day. This was on 9/1. anyway, these things, that's one, I think you got out at what, 13 and change. I don't remember seeing your confirm, but yeah. And I think those hit 15 or 16. That was an overnight swing that was sent to your phones. Again, not a lot of dollar size, but it was like, okay, I don't see enough of this. And I'm seeing so much Bitcoin flow. Mara was sent to your phones last week. Riot was too, even though that was a small gainer and probably actually a loser. Tomorrow, I think it's going to be on fire.
Another to bring up is while we've been kind of focusing on more of the equity and individual names, we also do have all of the ETF flows to just piggyback off of some of the activity that we've been seeing in the Bitcoin names. We have been seeing an uptick in BLOK. That is your Bitcoin ETF. So kind of a confluence of some money flow there, not only with individual names, but also the ETF. So definitely something that we like to see, that we've kind of got both areas being hit. So one thing I wanted to touch on personally is to kind of talk about what we call the black box advantage. There are a lot of individual questions here, and we're not going to be able to get to all of those individually, but one thing that I really think sets us apart from the rest is our commitment, first off, to our members to make sure that we're providing them with education live classes, so that they're able to go through this several times and be able to go and learn individually what each of the line items mean, as well as how to create a trade plan around that. What are we looking for? And one of the biggest things that we see is going back to that puppy trading reference, to where you're trying to find just one piece of flow that you want to work, right? That you're going through and you're saying, ooh, this one, I like this name. And you're only looking at that one line item. And that's not really how we get the story to be told. We're looking for that size, time, and urgency. And that's something that you'll hear us repeat over and over again. So while we try to stay focused during the day on the Discord chat, we do have live courses all in the evenings that are covering various topics. So we're going to take you from even your basic newer trader, get you set with a foundation on how, lots of questions in this chat on IV. Well, what moves that? That's going to be something that we cover in the stock and options basics class. But additionally, we also have morning webinars on Monday, Wednesday, Friday that are live. So that gives you a chance to have a moderator there walking through, clicking through to be able to see all of the activity and what we're isolating down. All of this is included in your membership. There is no tiered pricing for anything that we offer, because it's important to us that you first understand the information, but you're able to actually use it wisely, so you're not damaging your account. And that's the biggest thing as excitement grows and there's so much interest with options flow. If you are not using it the correct way, you're going to end up doing more harm to your account than good. So that is definitely something that we pride ourselves with. That's important to us. Those evening classes are live with a moderator covering various topics, but also throughout the day, there are several moderators on voice. I am one of them that's going through the options flow all through the day. So I do have experience sitting in the seat with this options flow. I'm comfortable with names. I know what to look for. And on voice, we're going through and pointing out what we feel is setting up, has that playbook, right? Same strike, same expiration, contract price going up. So we're trying to highlight those so that you're able to find trades that may be fitting your criteria. And one of the questions that we got was this FFIE. And if you start at the very bottom of that when they first came in, this wouldn't necessarily have been something.
Do I need to go to that symbol?
Nope.
No, I took the screen, Charlie.
Yep.
Oh.
So Juan's got us loaded there. Now, when you start at the bottom, you'll see that they came in 14 cents, 22,000. That's not much, but they didn't stop. And they still started to hit same strike, same expiration, contract price going up. Look how that IV has gone up as they came in. This is something that's more that momentum trade that while we want to really focus on and make sure we're paying attention to those big players, that hundreds of thousands, millions of dollars, there are still opportunities to be able to find what we call like that momentum trade. And here you had Friday, these went 14 cents up to 90 cents. So it showed the aggression sweeping activity to get into that trade. And this was something quite a few in the room, and you can see that momentum that came into that underlining. So this is something that we were calling out on voice when that was coming in, because first off, it's a name we don't see very often, and the way and the aggression that they were coming in when they were coming in really propelled and increased that IV. So that's kind of some of the stuff that we're talking about on the Discord voice. We also do have the proprietary dark pool volume profile study, and that's something that we're able to have the advantage to be able to see not only the market participation from an option standpoint, but also to be able to integrate this share, the dark pool shares that are coming through. And while we don't know if those are buys or sells, we're using those to be able to see and build off of for additional areas of support and resistance. So that has really been a game changer. First, to have the visualization of the dark pool activity, we're able to see how those levels come into play, but then we're also pretty much covering every aspect that we could from a money flow perspective. What are the larger market participants doing? And we're looking at the shares, and we're also being able to review what's coming through into the options market. So we're as close as we possibly can get to what big smart money is doing.
Awesome. Mel, do you have any examples off the top of your head? I meant to talk to you earlier about any that you can think of for put writing would be a good example to show that.
Give me 1 second. It'll be a historical, but it's a good one. It's going to be XLV. Let me find that date.
Okay, let me get over there. XLV, so I need to turn on my ETF filter.
And it was put writing. You can click for 500,000 or over because it was like a 1.1.
Okay. Let me get to take off calls.
And it's going to be XLV. It was probably 2 weeks ago. I mean, but it was a bigger. The move off of that one was definitely interesting, because we've had a lot of participation starting to come through in some of these bios and these healthcare names.
Just one, if you got it on, yeah, you two got it. Okay. If you want to go further back.
Why is it when we go off the cuff, it all of a sudden doesn't start working?
I meant to grab that date because I thought it was just definitely a really good example. And that's going to be, something else that we're looking for. Let me find that, Swan, just 1 sec.
XLV.
XLV. That's going to be from, let's see, where to go. XBI, I'm sorry, XBI.
That was on.
There it is.
There you go. And there was an additional with that if you wanted to take it off that 500,000. And the move that this one made. So here you had this sector, XBI definitely was lagging. So this is going back to August 18th. We had seen most of the sectors acting pretty well, XLV doing well, but then here you had the XBI, the biotech industry ETF just not really performing. And we had called this out because this is large. This is an example of large, this is bullish put activity. So you can see that they're writing the 120 puts, and they're doing that to collect premium. And from that date, you've just had a really nice acceleration and a lot more activity and flow coming into that bio sector, those pharmaceutical names. And so this is definitely of interest because it pretty much nailed the bottom here into that sector as we've continued to see some upward momentum and more activity come into some of those individual names.
Yeah, so do you want to go over how you can explain how we know this is put writing with it being a yellow?
Sure. So we use a color coding system on our platform because there is so much information. We keep it just very easily to identify. So a white line item is going to tell you that individual line item has not exceeded open interest in that single contract. Thank you. And then the purple is going to say that OI has now been exceeded through multiple contracts. So we're looking at the existing open interest in a contract. So OI, open interest. There you go. And when we see yellow, it means that that single line item has exceeded open interest for that strike and expiration. And when we look particularly at this example, we can see that this is bid side. So you're not able to close something that is not there. So think about that. This is a yellow sweeper bid side. So what this is telling us is that they're closing, or it's bid side, they can't close something that's not there. So with 242 contracts, this is exceeding open interest. It's bid side that is writing to collect premium. And we're going to kind of use the same criteria, but we're going to reverse it. So we can see that the IV was 34. And then as they come in again, we're now going down to 33. And we've continued to see a decrease in that pricing because as they're writing, that IV is going to decrease. So they're writing to collect premium. And it's kind of a little something that can kind of be confusing, but I think we do a good job talking through that in the room, just making sure we're covering, what we're seeing call side, bullish, bearish, and all the aspects that we could use to really fully dig into the information that we have at our disposal. This is not something you're going to find at many sites because they don't show you the bid side activity, which means you're not getting all the information.
Yeah, so when we see calls coming in at the ask or above the ask, and we also see, put writing like this, that just gives another piece of that puzzle. It's, again, as we talked about earlier with those Legos, right? We want this flow to tell us a story. And when we start seeing the, action from both sides pointing to a direction, either bearish or bullish, now instead of just a pile of Legos confusing flow, we now have a story and can see which direction to go.
And, we all use BlackBox, but I want to stress this again. I'm not trying to sell you anything. Mel and Swan aren't trying to sell you anything. We just want you to use flow correctly. Obviously, we think this is the best system out there because we teach it all day. And again, with that Netflix example, I was able to say, yo, don't buy that. And 7-Star Mike was able to say, don't buy that. It's not fitting the pattern. Unfilter everything. Let's look at OI tomorrow. We're 100% right live. Where a lot of sites, if all you've got is that ask side, you're probably jumping in there because you see a bunch of money coming into Netflix that was really just them selling a position, and they sell it on, if I write calls, like Mel just showed right there below bid, I have to buy them back on the ask, right? And I'm usually just going to sweep the market. So it's going to be ask above ask. So it's easy for us to tell we actually use this every second of every day. But with what we've shown you, you should be able to use any of these other flow surfaces, which is fine with us, by the way. We have 6,000 members. Use it more correctly. And if you use it more correctly, this was time well spent on what is this, Labor Day? Yeah. Time well spent for us. If you take one thing out of here and it helps you, that's time well spent for us. Mel, I did want you to talk a little bit about, and a lot of sites do call dart pools asks and sells, and to me that's also misleading.
Yes.
These things can come in delayed. While some of them come in live, if they come in 10 seconds delayed, that can change so much about, Smell, I'm gonna let you have that because this is your area.
Yes, and that is very it is definitely unfortunate because first we're going to do very brief, and I'll try to talk quickly so we're not spending too much time because I do have a class that goes into more detail. A dark pool is an exchange, and it's an exchange used by larger market participants so that they can find and fill their larger orders without disrupting the current bid-ask spread, the current auction process. So that is not activity that is occurring or pulling liquidity from the lit market. So the lit market is what you and I see as we're reviewing level 2. You've got orders set up, creating, walls, and if you've read tape before, you'll see those orders. However, everything that occurs on an underlining has to be recorded. So all volume must still be recorded. So whether that's occurring in a lit market, on an exchange, or on a private dark pool exchange, all volume must still be recorded. However, dark pool liquidity is not being taken from the activity that you guys see on the bid-ask spread and what we're watching on level 2. So with that being said, an order gets filled, and what is often a common misconception is that there's a one-for-one transaction, and that's not always the case. If you're Buffett and you're coming in trying to buy a T-Mobile and you want 5 million shares, that doesn't mean that somebody's coming on the other end of that trade with 5 million shares to get that fill. That could be across several, and often is filled with multiple orders. However, that only has to be recorded to the consolidated tape or time and sales once that order has been filled. And at that time, that order will transpire and transact on your time and sales. Now, no liquidity was pulled from the current bid-ask spread. And so what you can have occur is, fictitiously, since we're talking about T, let's say you had $20 bid and a $21 ask. Well, that can come in and it could be at $19. That would show by default that that was a quote sell, but that's not necessarily the case. Remember, it's a recording of a transaction. So if you've got people just pulling the orders off the tape and denoting that as a buy or a sell just based off of where that's falling between your current bid-ask spread on your time and sales, the information is incorrect. You do not know the intent of the sale, and that's the reason why they're transacting on a private exchange.
And we have, we're one of the pioneers in dark pool as far as that goes. We have all that ask, bid, below. And we could call it buys and sells. We refuse to do it because it's misleading. We absolutely refuse to sit there and call that a buy or sell because it's misleading. Just sort of like where we've shown that everything that come through on the ask wasn't clean buying. That was actually them getting out of a trade. Look at the same thing with dark pools. If you don't understand all that information, it is more dangerous to you than not having it. I would rather you not have information. I would rather you not use flow or dark pool if you're going to use it incorrectly, because it gives the whole sector of flow traders a bad name. And that Netflix was a great example of us trying to stop members from piling into that trade, because we can see, even before I added bid side to it, Mike's like, man, the price isn't going up. Run. These are things that you have to learn how to use, because using anything incorrectly, using a gun incorrectly, is the most dangerous thing you can do. Using a tank incorrectly is the most dangerous thing you can do. Flying a plane that you don't know how to fly is dangerous. Using options flow or dark pool that you don't know how to use will hurt your account. I would rather you not use it than to use it incorrectly. It breaks my heart. We had a guy come in Friday. We get all these alerts. We're not on my page. Anyway, we get a lot of alerts. Go ahead and show them some of the alerts. And he just went with the first alert that came in of the day, which was Tesla, which was actually the worst alert of the day. An alert doesn't tell you, buy me, right? An alert tells me, Mel woke up this morning on time. She had a cup of coffee and she walked her dog. But what I'm looking for in the alert is Mel woke up early, drunk a gallon of coffee, and her and her dog ran a marathon. That's the flow I'm going to follow. not just XYZ happened. Mel woke up, she had a cup of coffee, walked her dog. Mel woke up, had a cup of coffee, walked her dog. Mel woke up, had a cup of coffee, walked her dog. Could care less. That's what an alert is. That's all it's telling me. XYZ happened again, yawn. XYZ happened again, yawn. No. I was up 30 minutes early. She had that Starbucks cappuccino rolling by the gallons, and her dog couldn't stop running. That's the alert I'm looking for. That's the options flow I'm looking for. None of this just rando stuff, you know. While we have great alerts, I play very few of these, and I wrote them. All those alerts right there came out of my math, but they're to let me know, hey, Charlie, something else happened. So look at it and go, it didn't meet the STU criteria, size, time, and urgency. Size, time, and urgency. Is it millions of dollars or at least $1 million? How much time on it? How much urgency was behind the trade? Was it ask above ask? You know what I mean? That's what's gonna get me going. So again, STU. Mel woke up 30 minutes early, had that size in that cup of coffee. Her and her dog couldn't stop running. They were urgent to get wherever they were going. That's what we're looking for. So if any members that are watching this right now and you're looking at, I guess, one screen, forget those alerts. How did CRM do though, by the way? Because that is one we showed. What was that? That was one that we showed earlier. Came in at what and went to what? I can't read that.
675 and it went as high as 787, closed at 775.
Yeah, $100 chuck. And again, we put that one live out on Twitter as good quality flow, way before it came out on CNBC. So that's the kind of alert I'm looking for. Is it as sexy as some of those other ones? Absolutely not. Did it make 100%? Absolutely not. Was it the safest play I could find? Absolutely. I'm here about safety. I'll take singles. I don't need home runs. I do this for a living. If you've ever watched the movie Rounders, listen, punk, I've got alimony to pay. I've got rent. My kids need food and college tuition. I don't give a shit about home runs and dreams. I care about putting money in my account. Anyways, a Rounders scene if you're a poker player. So yeah, I'll take the CRMs all day. I don't need the 100% alerts. I like them. I love to have them. But at the end of the day, I know what's safest for me to play and for my family and my kids to get to go to college. CRM. We got any more questions? I mean, I don't know if we're starting to ramble or what we're doing here. I'm so nervous. I don't even remember what we've talked about. These things make me very nervous, everybody.
I got lots of questions, but Mel's doing a great job answering them. One that I've seen a couple times come through is, how do we know when to get out of a flow play?
You never know. AXP was a good example earlier that we talked about. That went up from what was it, $8.30 to probably close to $10, and then the whale herself is getting out of it a couple of days later at a loss. I take profits, man. You know, some of these things, you know, if you're a good chartist, you know, something like that coop we shown that went from the $9 range to almost 45, or, you know, 500%, 400%, whatever, however you want to calculate it. I couldn't hold through that. Tanner charting options, he's still holding it. You know what I mean? His chart told him to stay in. That gets more on the technical side. I will tell you one thing, when I'm up, you know, X amount, in most situations, a stop is going to go in to you know, and I did play Coop, and I remember right, I think it seems like I got Coop for like 980 and was out at like around 15. And my stop had got, you know, finally got hit. I think it was a little too tight probably. And I posted some more on Twitter, you know, Snow here recently that, you know, I'm like, push your stops up. So let's just say you buy something at $9 and now it's at $9.50. Okay. Market's looking good. At least put your stop at break even. At least put your stop at break even. Now it goes to $10. Let your stop out there at $9.40, $9.50. You get stopped out, that's fine. You still have a good trade. It moves up to 11, push that stop up to 10 1/4. Goes up to 12, push that stop up to 11, right? Keep pushing your stops up. That's how I prefer to get out of a trade, is to get stopped out by pushing my order up. Now, sometimes I just look at it and go $100 chucks. I've got too many things in the account, and I don't like to do that. So when I start to have too many open positions, something may get open $100 chunk. If things are still looking good, in a trade, I do prefer to have a stop in and keep pushing that stop up. That's how the most effective way you can do it.
Agreed, 100%. Yep. Let's see, Mel, are you seeing any repetitive questions that we could take? I know there's a lot of individual stuff here that we'll just have to answer on our own, but.
Yeah, Charlie, we do have a few people interested in joining. Did you want to kind of show your link where they can click? And again, guys, anything that we're talking about, we don't have separate charges for if you want to take a class to learn something, it's going to be an additional this much. That absolutely is not what we're about. It's so important for us that you actually understand if you're using information to place trades off of. And additionally, while we've gone through and we've kind of talked through some historical activity to kind of just be able to have examples to review, this is something that we're talking about live as it's coming in. I'm one of the moderators, along with several moderators. We've got several eyes on this flow that have had a lot of seat time to go through and be able to help you digest all this information. So as this stuff is coming through live, we are on voice talking through what we like about that. We're calling those alerts out, and as well as taking trades and moderating those that you can choose to, join in or not. And of course, we'll put an exit, but just that this is something, while we've kind of backtracked a little bit to review, it's still something every day, all through the trading day, that we are going through live on voice as it's coming in, so that you can kind of see, look, it's meeting that criteria. Same strike, same expiration, contract price going up. I like this one. Look at that chart. We're going and looking at our chart. Like that setup. We've got a bull flag breakout coming through. Whatever and however, we're all traders that are on as mods on voice. So we're there to help and walk through the information that's coming into the platform, so that you're not doing this and making mistakes with your account just because you're picking, what you think is good flow. You're going to hear that all day long, the same thing over and over again. Same strike, contract price going up. We've got time behind it. We've got money flow behind it. It's shorter dated, but they sure still like this one and keep coming in. And that's something we're talking through. We're highlighting some previous dark pool activity that we've had come in, some different, just whatever, is going on that's not anything that you're doing solo is what's important, along with, trading classes in the evenings for additional resources.
People wanted to join. My God, I did not do this. This webinar I thought was mainly going to be members. I swear to everybody, I'm not trying to sell anybody anything. I just want you to use flow correctly. That's it. That's my life's mission. Like I posted on Twitter last week, I'm going to make y'all use flow correctly. If it kills me, I'm going to stick to that.
Amen.
Yeah, I'm not, honestly, if you're interested in BlackBox, there is, let me just cruise Mel real quick. And Swan, every one of us, and for the record, I'm not an affiliate, so I do not get paid if you sign up. I do have a discount link in my bio that gives you $20 off your first month. Mel has one, and so does Swan. If you heard about us through Theta Warrior, he's got one that'll give you $20 off. So does Charting Options. We've all got links in our bio that get you $20 off the first month. So however if you heard about this webinar from Mel or Swan or 7-Star Mike or anybody, we've all got $20 links that you can use in our bios that'll get you $20 off your first month. But again, I will do this every day of the week for any service out there. I would do it for Flow Algo, Cheddar Flow, Trady Ticks, anybody. This isn't trying to get you BlackBox. I want you to use flow correctly, because at the end of the day, if you use flow correctly and you recommend flow to your friends, because to me, it's the most profitable way of trading that I've ever found. I've been doing this for 22 years. If you use it correctly. If you don't, it's the most dangerous thing. So it's technical. If something's in a bull, I seen this the other day. Somebody called something an inverted head and shoulders, and it was a head and shoulders. Just completely bad call. And they had like 20-some thousand followers, and a few of us were like, "What the hell?" So using anything incorrectly is dangerous, right? Whether that's charting, whether that's flow, whether that's, playing heads or tails, however you get your trades. If you do it wrong, you're not going to be a successful trader. And I'm not even trying to talk anybody into being a flow trader. It's something that I think you should add to your arsenal. Maybe you're a great technician. See if flow matches up with it, right?
And again,
I'm
this
just
is
a flow
not,
trader.
this is, yeah, and flow is, and same thing with dark pool. We're just trying to understand where big money is putting money to work, right? And that's just where we want to be aligned, with where they're the market movers. So if they're going to lay down a couple $1 million into something, I certainly want to know.
But I'm not interested in 20,000. I'm not interested in 80,000. Those things, and that's where people get on any flow service and they start puppy trading. Hey man, there's 20,000 into Netflix. At the end of the day, who cares? It's $20,000 into Netflix. Not that that's not a lot to everybody on this webinar, but as far as following smart money, that doesn't even start to make the radar. I know thousands of people that can buy $20,000 in Netflix. It doesn't, that may be their full account they went all in with. We don't know. So we're looking for big money. We're looking for size, time, and urgency. Anyway, let's hit a couple more questions. It's Labor Day. I'll go chill out. We got 500, and I just looked, 535 people. So thank you all very much that attended. No way we can answer that many. We'd be here till tomorrow. So apologies for that.
So here's one that I think's been asked a couple times. How do you gauge what's a strong amount of flow for a ticker? Like $1 million into a lower price ticker is going to be way more significant than $1 million into a much higher price ticker. So
absolutely. Go ahead, please.
So that's where we talked about the STU formula. STU, size, time, and urgency. But you are absolutely correct in that question, Vance, and that is different tickers. If we see $1 million into Tesla, it's not going to even turn my head, because the amount of flow that goes into Tesla is insane, or Apple. It's insane. Now all of a sudden, when you get that $1 million flow into Coop, that all of a sudden grabs our attention, because we don't see flow in that ticker very often. If you see millions of dollars go into pins, that's going to catch our attention. And what we really like to look for is, when we say size, time, and urgency, it's not one of those, it's a combination of all three. So you may have a $2 million sweep, but if it's into Apple, it's not going to do much for me. But if it's into Coop or into pins or into, another ticker that we just don't get a lot of flow in, that's going to grab our attention, because we just don't typically see that amount go into that ticker. Now, the urgency part is showing us, when we say urgency, it's not meaning that they are buying short dated contracts. That's not what urgency means. Urgency means we see sweep, 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 sweep. They come in, they come in, they come in. That price is going up, and they keep buying, they keep buying. It's at high of day, and they keep buying, they keep buying. That's urgency. All right, we keep seeing those sweeps come in. Yellow sweeps in our system, showing yellow, meaning that transaction is exceeding the open interest. It shows they want in. They don't care how much it costs. They want in. Go get them that contracts from any exchange. So it's all three put together that make the STU, size, time, and urgency. Same thing with that checklist that we had. Oftentimes people will look at this checklist and they'll say, oh, look at that, same strike, same expiration. It checks the boxes. I'm into it. But you just ignored the rest of these boxes. See, it isn't a check one and it qualifies. No, it needs to check all to qualify. So you're absolutely right. The price of the flow or the amount of the flow depends on the ticker, but it's just not the amount of money going into it. That's one of the points on the checklist. That's it. Let's see, what else? I'm looking here. A lot of thank yous.
Oh, and please, do sign up for BlackBox. Please join the Discord so you can hear us live, and download the Flow Play app, the app in the App Store. Because again, the best of the best. If you'll take, if you download the app and you check the Flow Play, that's the best of the best. It's not a lot of trades. It may be one day, 3 one day, could be none one day. That's possible. It's rare, but it's possible. We're going to take the best STU, size, time, and urgency. We're going to send it to your phone. So if you're working 9 to 5, we're going to send it to your phone. If you're trading, we're still sending it to your phone. So please, if you are going to join, and thank you, Jenny, for texting me, please join Discord, because this stuff is impossible to learn it on your own. Trust me, you didn't learn flow by watching this video. You've got some good pointers, but it takes time in the seat. You have to apply these methods. You have to, really learn. Take Mike's class on Thursday, which is nothing but flow. On Thursday nights, Mel's got a dart pool class. I think it's every other Thursday, maybe. So yeah, you have to take the classes. You have to put in work. You need to join the Discord if you can. If you're working 9 to 5, which we have a lot of members that are just literally working 9 to 5 and doing some swing trades with us because they can't watch it. But if you can and you're able to, then please, yes, join the Discord and get in there live. Sorry, I interrupted.
No, you're good. You're good.
Well, y'all want to call it a day? Anything else?
It's been over an hour and a half. I think we're doing well. I'm good if you guys are good.
All I really wanted to cover, I know I had a bunch more tickers wrote down that I've got nervous and forgot them.
There was JD. I'm trying to think of. I don't think I want to go over that one though. It was too confusing.
Yeah. And there is times, and that's another thing. Let's go ahead and get this out. Let me get this out there. There's sometimes that even flow comes in that, me, Swan, and Mel even look at it and go, guys, move on. That's who the hell knows what they're doing. And when you say flow like that, don't try to make a house out of it like Swan showed you earlier with the Legos. Don't try to build a pool behind it. Just ignore it. The rule of thumb is if you can't understand it in 3 seconds, you need to move on, right? Don't force it because it's your narrative and it's like, oh man, that flow is confusing, but I already like Netflix, so I'm going to buy it. No. Not off flow. Buy it off a chart, buy it off momentum, buy it off whatever, but don't buy it off that flow. If you don't understand, it needs to be clear. And I say this a lot, some of y'all get stubborn in your trades. If your wife or husband's at the neighbor's house every night partying it up and sleeping with a neighbor, at some point you got to end that relationship. Same thing with a bad trade. You've got to cut it. You know what I mean? Don't get stuck in it. There's no such thing. When I go to E-Trade, it says limit out, market out, but it damn sure doesn't say stuck. There's no option for stuck, so don't do it. Don't be stuck. This stuff does require a lot of work. I don't care what service you're with. So does technical analysis. Every style of trading requires work. There is no just one size fits all. This is the perfect, oh man, I'm going to be rich tomorrow because I'm a flow trader and I understand it. It will help you trade. It will make you some good trades. You're going to lose occasionally. I think that the stuff that we've sent out that at least hits 10% or higher, minimum for 10%. Now, when I say 10%, some of you are going, oh man, that's nothing. Sure, if you buy a 20-cent contract and it goes to 22 cents, that's nothing. I wouldn't even, that's a loss, right? We're talking about more expensive contracts because I don't really play a lot of the really super cheap stuff. 85% or higher will at least go 10% up. What we found, like that AXP that some people may have took a loss in, that was a great trade. Whether they exit or not, shit, that thing went from $8.20 to $10. I'm going to take that trade all day. Percentage-wise, it's 20%. That's a win. It's 20%. That's $180 a contract. That's all I've got, guys. I'm starting to really get nervous and ramble again. So
I think we're good.
Anyway,
we got the majority of the questions answered. I just want to I know you want to wrap it up, but I just want to say thank you, everybody. And we look forward to being with you this week. If you can join us, if not, we understand. We just wanted to get some more knowledge out there, some more people using the flow correctly, because we see on FinTwit and all these different posts, just people using it incorrectly, and it's creating them financial problems in their accounts. So we want to make sure we had a little clarity here.
Yep, this was fun. Definitely agree. And don't trade alone. You know, this is a lot of information. That's something we want to make sure that you do continuously understand, and especially being part of a group helps, and especially with experienced eyes. So for those that are registering, I know I'm getting a lot of questions about the Discord link and the app. You will receive an email once you register that will have all of that additional information that you will need. So make sure to check that email so we can get you set up and ready to roll for this next week.
Charlie, you want to bring us home?
Man, I appreciate you guys. 535. I'm shocked that many people would want to listen to us on a holiday weekend. That does show that y'all got a lot of dedication and that you're actually trying to progress your trading career, which makes all three of us, I can tell you, ecstatic, happy. Because again, I want you to be successful. I don't care whether you use flow or not, whether you use star pull or not, whether you use technical analysis or whether you flip a coin. If you're a successful trader, man, hats off to you. That's if you know, that's what we want out there. It's us against the man. It's actually you against the man, because we're all our worst enemy, like we talked about at the beginning of this webinar. So, you know, keep your emotions in check, keep your losses at a minimum, rock and roll. We appreciate you.
Absolutely. Well, you guys have a good rest of your holiday weekend, and we'll be back at it tomorrow morning.
Hey guys,
Thanks, everybody.